Item 2. Management's discussion and analysis of financial condition and results of operations. We are a leading developer, manufacturer, and seller of miniature displays and optical lenses, our components, for sale as individual displays, components, modules, or higher-level subassemblies. We also license our intellectual property through technology license agreements. Our component products are used in highly demanding, high-resolution portable defense, enterprise, and consumer electronic applications, training and simulation equipment, and 3D metrology equipment. Our products enable our customers to develop and market an improved generation of products for these target applications. Sales of our products for defense applications include systems used by the military both in the field and for training and simulation. Sales of our products for defense applications may be for a one-time purchase or for programs that run for several years. Revenues from product sales to defense customers increased in the 3 months ended June 27, 2026, as compared to the 3 months ended June 28, 2025, primarily due to higher production volumes of our products for thermal weapon sight applications and liquid crystal displays. The decrease in defense applications revenues in the 6 months ended June 27, 2026, as compared to the 6 months ended June 28, 2025, was primarily related to a decrease in revenue from products used in thermal weapon sights and liquid crystal displays. Industrial applications revenues represent customers who purchase our display products for use in headsets used for manufacturing, distribution, public safety, 3D metrology equipment, and other industrial applications. Our 3D metrology customers are primarily located in Asia, and they sell to Asia-based contract manufacturers who use the 3D metrology machines for quality control purposes. The industrial applications market has seen new entrants over the last few years, which has led to increased price competition. We have introduced lower-priced products to compete with our competitors, but we expect this trend will continue, and hence we are focusing our product and selling efforts on other more attractive market segments. Sales of our displays for consumer applications are primarily for use in thermal imaging products, recreational rifle and handheld scopes. R&D revenues increased in the 3 and 6 months ended June 27, 2026, as compared to the 3 and 6 months ended June 28, 2025, primarily due to the company's progress on the Phase 2 off-the-visor heads-up display program with the U.S. Army, and due to the start of the development program with Fabric.AI, entered into on April 27, 2026, to develop and commercialize certain GPU to GPU connectivity technologies. These contracts typically reimburse us for direct costs and allocated overhead in selling, general, and administrative costs, and in some cases profit. The slight increase in license and royalty revenue in the 3 months ended June 27, 2026, as compared to the 3 months ended June 28, 2025, is due to an increase in royalties earned under IP license agreements for industrial wearable headsets. Grant revenues increased in the 3 and 6 months ended June 27, 2026, as compared to the 3 and 6 months ended June 28, 2025, in connection with the company's government grant, awarded in the 4th quarter of 2025, for the development of ultra-bright, full-color micro-LED displays optimized for ground soldier augmented reality applications. Collaboration revenues increased in the 3 and 6 months ended June 27, 2026, as compared to the 3 and 6 months ended June 28, 2025, as a result of the company's strategic partnership, initiated in the 4th quarter of 2025, to develop the next-generation clip-on with augmented reality and thermal integration capabilities based on the company's microdisplay technology. The decrease in cost of product revenues as a percentage of net product revenues for the 3 months ended June 27, 2026, compared to the 3 months ended June 28, 2025, was primarily attributable to product mix. Cost of product revenues as a percentage of net product revenues increased during the 6 months ended June 27, 2026, as compared to the 6 months ended June 28, 2025, primarily attributable to reduced production efficiency during the first 3 months of 2026. Research and development. R&D expenses are incurred in support of internal display development programs and programs funded by agencies or prime contractors of the U.S. government and commercial partners. R&D costs include staffing, purchases of materials and laboratory supplies, circuit design costs, fabrication and packaging of display products, and overhead. In fiscal year 2026, we expect our R&D expenditures to be related to our display products, overlay weapon sights, and OLED display technologies. R&D expenses for the 3 and 6 months ended June 27, 2026 and June 28, 2025 were as follows. Funded R&D expense for the 3 and 6 months ended June 27, 2026 increased as compared to the 3 and 6 months ended June 28, 2025, primarily due to the company's government grant for the development of ultra-bright, full-color micro-LED displays optimized for ground soldier augmented reality applications. Funded R&D expense includes costs related to grant and collaboration income. Internal R&D expense decreased for the 3 and 6 months ended June 27, 2026, as compared to the 3 and 6 months ended June 28, 2025, primarily due to lower labor hours spent on internal research and development activities. SG&A increased for the 3 and 6 months ended June 27, 2026, as compared to the 3 and 6 months ended June 28, 2025, primarily due to increases in professional fees and accrued performance-based compensation. During the 3 and 6 months ended June 27, 2026, we had gains on investments of approximately $2.3 million and $4.6 million, respectively. During the 3 months ended June 27, 2026, interest income decreased approximately $0.2 million compared to the 3 months ended June 27, 2025. Tax provision. We recorded a benefit for income taxes of approximately $2.1 million in the 3 months ended June 27, 2026, due to the expiration of the statute of limitation of an uncertain tax position. We recorded a provision for income taxes of approximately $0.1 million for the 3 and 6 months ended June 28, 2025. Net income loss. We had a net income of $0.8 million and a net loss of $2.9 million during the 3 and 6 months ended June 27, 2026, respectively, compared to net losses of $5.2 million and $8.3 million during the 3 and 6 months ended June 28, 2025. The decrease in the net loss during the 3 months ended June 27, 2026, compared to the 3 months ended June 28, 2025, was due to gains on investments of $2.3 million, a $2.1 million tax credit, and increase in total revenues. The decrease in the net loss during the 6 months ended June 27, 2026, compared to the 6 months ended June 28, 2025, was primarily due to a gain on investments. On September 29, 2025, the company entered into a securities purchase agreement, the purchase agreement, for a private investment and public equity financing, the PIPE, for 19,545,950 shares of its common stock, par value $0.01 per share, the shares. The net proceeds to the company from the offering were approximately $38.1 million, after deducting placement agent fees and commissions and estimated offering expenses payable by the company. The transaction was consummated on September 30, 2025. On October 16, 2025, the company completed a $15 million strategic investment with Theon. Under the terms of the agreements, Theon acquired a 49% interest in Kopin's subsidiary, Kopin Europe Limited, for $8.0 million, and the parties entered into a licensing and development agreement and funding agreements relating to the joint development of military products. In addition, Theon purchased $7.0 million worth of shares of Series A convertible preferred stock, par value 1 cent per share, of the company, the preferred stock. Each share of the preferred stock was convertible into shares of common stock, par value 1 cent per share, of the company, the common stock, at an initial fixed conversion price of $3 per share, pursuant to the terms of the Certificate of Designation for Series A convertible preferred stock of the company, the Certificate of Designations. The company had the ability to force the conversion of the preferred stock into common stock once the company's common stock trades at $5.50 per share or higher for 10 trading days, as defined in the Certificate of Designation, within a 30 consecutive trading day period. The preferred stock will carry an annual dividend of at the base rate dividend rate of 4%, 2% payable in cash, and 2% payable in stock. With the close of this transaction, Kopin Europe Limited was deconsolidated from the company's consolidated financial statements. The consolidated statement of operations, therefore, includes 9 months and 16 days of activity related to Kopin Europe Limited. The assets and liabilities of Kopin Europe Limited are no longer included within the company's consolidated balance sheets. Any discussions related to results, operations, and accounting policies associated with Kopin Europe Limited are referring to the current period through this transaction and prior periods as consolidated. On May 28, 2026, Theon exercised its conversion right under the Certificate of Designation to convert all 1,000 outstanding shares of Series A convertible preferred stock into shares of common stock. The conversion was effected at a conversion price of $3 per share, resulting in the issuance of 2,380,973 shares of the company's common stock to Theon. The company's Series A convertible preferred stock has been retired and no shares of Series A convertible preferred stock are outstanding. The domestic locations balance of $50.3 million and $61.6 million for the period ended June 27, 2026, and fiscal year ended 2025 includes $25.4 million and $25.3 million of restricted cash as of June 27, 2026, and December 27, 2025, respectively, that is not available for current operating use. The manufacturing operations at our Korean facility, KOPN, have ceased, and KOPN was liquidated at fiscal year ended 2018. As of December 27, 2025, we had recorded deferred tax liabilities for any additional withholding tax that may be due to the Korean government upon KOPN's final tax return acceptance. The statute of limitations expired during the 3 months ended June 27, 2026, and reversed the deferred tax liability of $2.1 million as of June 27, 2026. We expect to expend between $5.0 million and $6.5 million on capital expenditures in the second half of 2026. Management is actively engaged in the implementation of a remediation plan to implement measures designed to improve our internal control over financial reporting, to remediate these material weaknesses with oversight from the Audit Committee of the Board of Directors. There were no changes in our internal control over financial reporting during the quarter ended June 27, 2026 that have materially affected or are reasonably likely to materially affect our internal control over financial reporting.